History doesn't announce itself with a trumpet or a grand press conference. It shows up looking incredibly boring, wrapped in bureaucratic jargon, while everyone else is looking away. Right now, as you watch this video, the concept of money itself is being systematically rewritten. While retail traders are screaming at charts, panicking over short-term price drops, and arguing about whether Bitcoin or Ethereum is going to pump next week, the foundational plumbing of global empire is shifting. Dollars are migrating onto public blockchains. Blue-chip stocks are being quietly converted into ERC-20 tokens, and the biggest, most conservative banks alive, institutions that have survived world wars and imperial collapses, aren't fighting the technology anymore. They are moving into it. They are occupying it. If you're waiting for a sign that the financial system is changing, you've already missed it. The flip has already happened. Today, we are pulling back the lens from the daily market chaos to look at the massive tectonic transition happening beneath our feet. You're listening to the Signal and Noise podcast. My name is Newell. Let's cut through the static. Look, if you scan the headlines over the last few months, it looks like a total mess. You see regulatory battles, political theater, and wild market volatility that makes it seem like the digital asset space is just one giant, chaotic casino. But if you strip away the daily price action, if you delete the noise, a completely different picture emerges. We are witnessing the quiet convergence of three separate multi-trillion-dollar pillars of global finance. First, look at sovereign currencies. We aren't just talking about experimental central bank digital currencies anymore. We are talking about major commercial banking networks, like Europe's multi-trillion-dollar powerhouse Crédit Agricole, launching native, fully compliant euro stablecoins directly onto the public Ethereum mainnet. Second, look at traditional equities. Brokerages like Robinhood are no longer content, just acting as a digital facade for old Wall Street clearinghouses. They are building their own dedicated Layer 2 networks to tokenize stocks, ETFs, and real-world assets so they can settle trades instantly, 24/7, with zero middleman friction. And third, look at the infrastructural backbone. Global banking systems are integrating decentralized Oracle layers like Chainlink to link ancient Swift messaging networks directly to public and private blockchains. When you stack these events side by side, you realize they aren't isolated news stories. They are coordinated milestones of a singular event, the migration of global wealth onto a unified programmable ledger. So, why isn't everyone talking about this? Why is the average retail investor completely oblivious to what's happening? Because of the price trap. The media has conditioned us to measure the success or failure of decentralized technology purely through the lens of a ticker symbol. If the market is down 10%, the headlines scream that crypto is dead. If a token pumps 50%, they scream that retail euphoria is back. This is the ultimate distraction mechanism. It keeps you focused on the microwaves while completely ignoring the macro tide. Think about who benefits when you are distracted by short-term price volatility. While retail investors are busy getting liquidated on 20 times leverage or panic selling their spot positions because of a bad news cycle, institutional giants are quietly acquiring the infrastructure. They don't care about the price fluctuations of the next 30 days. They care about who owns the financial operating system for the next 30 years. The noise tells you that blockchains are volatile, dangerous, and speculative. The signal shows you that the people who control trillions of dollars of global wealth are building their entire future infrastructure on top of those exact same blockchains. They want you looking at the volatility so you don't notice the ownership transfer. Let's look at how systems actually transform, because history gives us a perfect blueprint for this. When the internet first arrived in the 1990s, the mainstream financial elite dismissed it. They looked at early web pages and said, "This is slow, it's insecure, it's only good for sending text emails or sharing niche academic papers. Capital markets will never run on this." They treated the internet like a toy. But while they were laughing at the limitations of early dial-up, engineers were quietly laying down thousands of miles of fiber optic cables underneath the Atlantic Ocean. They were building the broadband infrastructure. By the time the legacy institutions realized the internet was a threat, it was too late. The internet had already swallowed the global communication grid. The exact same thing is happening right now to the settlement grid. Right now, moving money across borders or clearing a stock trade requires a massive web of correspondent banks, central clearing parties, and legacy databases that don't talk to each other. It's slow, it's expensive, and it introduces massive systemic counterparty risk. Tokenization fixes this permanently. When a stock becomes a token, it inherits all the properties of a smart contract. It can be traded frictionlessly, it can be fractionalized, it can be used as collateral in a decentralized lending protocol instantly, without a 5-day settlement delay. We aren't building a new asset class to sit alongside the old system. We are watching the old system get hollowed out from the inside out. The shell looks exactly the same, but the core is being replaced with cryptography. Let's take this one step further, because this isn't just an economic shift, it's a geopolitical necessity. The world is currently dividing into competing economic blocks. We are seeing massive friction over cross-border payments, sanctions, and monetary sovereignty. For decades, the entire world relied on a single, centralized financial rail controlled heavily by Western legacy institutions. But that system is hitting its structural limits. Nations and massive financial consortiums are realizing that if they don't secure their own position on public, decentralized infrastructure, they risk getting cut out of the future global economy entirely. By utilizing public blockchains like Ethereum as an open, neutral settlement layer, competing global entities can transact with absolute mathematical certainty without needing to trust a centralized rival. The public blockchain becomes the ultimate neutral ground for global commerce. This is why Europe passed sweeping frameworks like MiCA. This is why multi-trillion-dollar asset managers are aggressively pushing for tokenized funds. They aren't doing it because they love open-source technology or decentralized philosophy. They are doing it because whoever controls the most efficient, automated, and secure financial rail controls the flow of global capital for the next century. So, when you look at the market this week, when everyone else is obsessing over the charts, screaming about daily liquidations, and debating whether we are in a bull market or a bear market, I want you to take a step back. Ignore the noise of the ticker symbols. Look at the plumbing. Look at the billions of dollars of real-world assets quietly crossing the bridge onto decentralized rails every single day. Look at the infrastructure being locked into place by the largest institutions on Earth. The system isn't going to warn you when the transition is complete. You won't wake up to a giant headline saying, "The legacy financial system is officially over." It will just happen quietly, completely, until one day you realize that every asset you own, every payment you make, and every contract you sign is running natively on a blockchain. The signal is clear. The code of the global economy is being rewritten in real time. The noise is everything else. Make sure you hit that subscribe button, smash the like, and drop a comment below. Are you watching the daily price, or are you watching the infrastructure build? Let me know your thoughts down there. Until next time, stay analytical, focus on the signal, and ignore the noise.